Today is absolutely crucial. If you learn support and resistance, you are going to learn where stocks are going to reverse at. If you know where stocks are going to reverse at, you are going to be able to know your entries. You're going to be able to know exits. You're going to be able to know stop losses. You will be able to predict the stock market. Today, support and resistance is hands down the most important thing that I'm going to teach you throughout the next 3 weeks. Now, there's different levels of support and resistance, and today we're going to stick with the basics of support and resistance and build off of it. It does take time to be able to learn all the different areas of support and resistance, but once you handle this and once you be able to grasp it fully, you will be able to figure out your entries and exits. So studying this is going to be able to be a direct translation to you making profit or you having bad entries, which will lead towards you losing profit. You must study this topic as hard as you possibly can. So when I talk about support and resistance, what does this mean? Support is going to be the floor. You might hear someone say, okay, this is the platform, this is the floor, this is the bottom. Resistance is going to be the top. Every time you hit this area, you start falling back on down. So if we want to think about this in a stock, we could say that this stock has $5 top resistance and we have $4 bottom support. When we come up to $5, we hit it and we fall on down. And when we hit $4, we hit it, we come on up. We hit $5, we come on down. We hit $4, we come on up. And guess what? Here comes the predictability. Wouldn't it be predictable now to know that if I wanted to do a short or if I wanted to do a put contract at $5, it'd be a great chance of me winning? Just like if I wanted to buy shares down here next to the $4 mark, or if I want to do a call contract, there would be a great chance of me winning. Because the past is going to be able to tell the present. If we can see what the stock has done in the past, we'll be able to correlate that to the present moment for us to be able to make money. So what is support? Support level is the level at which buyers tend to purchase or enter a stock. It refers to the stock share price that a company rarely goes below. Support levels in stocks can be created by limit orders or simply the market action of traders and investors. So support is going to be a floor. And it's going to be made up by a psychological move from traders. Remember, why do stocks go up? Stocks go up because people buy them. Why do stocks go down? Stocks go down because people sell them. There's going to be some price points that there are going to be more buyers than sellers whenever we come down to them, or where we go up to them resistance and it starts coming back on down. A great example of this would be, let's say, for the S&P 500. Let's take a look over on the SPY. And what do we notice? What happens at around, we could say 410. It usually happens a lot around 410. Or even if we just take a look over on right here. This was what I sent out in the morning newsletter today. I said 417 is the main resistance line to break today. Watch for the first reversal at 417. If you can break and hold 417, get ready for a push. Why would this be significant to us? Because if you guys take a look, you can see when we come down to 417, we bounce off it. We come down to 417, we bounce off it. We come down to 417, we bounce off it. We come down to 417, we bounce off of it. Eventually, we fell underneath it. But now it's holding up as resistance and resistance and resistance. And now it's hard to get above. So once you find your key prices, that is going to be your support and resistance line. And now 417 is a psychological number. It's a number to me. As I know you come up to that area, we have seen this for the past year and a half straight, that it's very tough to either break above, or if you're above it, to go underneath. We usually see reversals here. The big thing that we want to start gauging is if we can figure out where a stock is going to reverse, that's where we're going to be able to make the most amount of money. Everyone thinks in stock trading, it's all about, okay, what's the best stock to buy? Guys, as a day trader especially, it's not about what's the best stock to buy. It's about what stock is going to be hot and volatile, stocks that have volume that we talked about yesterday and have movement, but at the same time, stocks that are going to reverse. If I can be able to figure out when a stock is going to start heading on down, I'm going to be able to make money. Just like if I can figure out when a stock is going to start moving on up, I'm going to be able to make money. If I have a hot stock that's moving and I can be able to predict if it's going to go up or down at a certain price, that's where we're going to be able to make a lot of cash. So just like right here, we can take a look over on the SPY at the price of 410. So here's 410 over on the S&P 500. And notice we are having some nice bouncing right at 410. As 410 happens, you guys can see we came on down, bounced off 410. Absolutely great. You can also see we bounced off 410 in pre-market as well. We keep bouncing right off this 410. Let's go back into a little bit of larger time frames and let's take a look to see how many times we have bounced off 410 maybe in the past. So let's go back to about a 15-minute time frame. And can you guys realize that not only did we bounce off 410 here and here and bounced off it here. We've also bounced off it right here. When we were above it right here, we bounced off of it. We also went a little bit underneath it, bounced off right there, right? We're just looking at this blue line at this moment. Let's even go even farther back. Let's go back to like a 30-minute time frame. Can you guys see that we bounced off 410 way back here and way back here? Can you guys see that we bounced off 410 here and here and here and here and here? Can you guys realize that every single time we have come down to 410, this is since April 20th, 2023. Right now, for anyone that's curious, it is May 10th. So we are looking over the past month. Every time we have come down towards the price of 410, bounce, 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 bounce. We got back above it, bounce, 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 and look what's happening. Bouncing off 410. Let me ask you guys a question right now. Is this some sort of math algorithm I'm teaching you guys right now? Is anyone saying, oh, Deck, I'm not smart enough to stock trade at this moment? Traders, you don't need to do any sort of algorithms whatsoever. There is no crazy formula you need to do in any sort of way. All you guys have to do when you guys are watching these plays like the S&P 500 is look at where did it bounce in the past. That's going to give us a great indication on where it's going to bounce in the future because of the psychological price point. I know it's going to bounce at 410. You know it's going to bounce at 410. I put an order at 410. You put an order at 410. This guy puts an order at 410. Everyone puts an order at 410. Now, since everyone did it, it actually does happen. So it's one big psychological game, the stock market, trying to understand not only what I want, but what does everyone else want? Because what everyone else wants is actually going to lead towards the market moving in one way or another. So when we take a look at support is the level at which demand is strong enough to stop the stock from falling any further. So we can see right here in this image, we do have the stock falling and fading, and it bounces and changes complete direction. And that's because traders see that at that price point, we are going to be moving in. We're going to have more buyers than sellers. Now, resistance is just the exact opposite. Resistance level is a stock price that the share value has touched, but has not been able to move through the upside. The resistance level is a horizontal line at top of the share price chart at the price the share value has not exceeded the time period being reviewed. So essentially, traders, what we have here, it's the same thing. You know how I talked about support being the floor? Resistance is the roof. Resistance is the ceiling. We are standing on the floor. When we come up towards the roof, we can't go above it. So now, once we can figure out support and resistance, life in stock trading becomes 10 times easier. We can see that we bounce at the price of $5. We can see we get rejected at $6. Now go have your fun. Well, we come back on down to $5. We can make money as it goes on up, right? We can take profits right here, or if it comes back on down, we can buy some more shares. Then it goes all the way up to $6. We can get out of this play. We can do a short on this play. It starts heading back on down. We can get out of our short. We can enter more shares. We ride all the way back on up. Once you figure out support and resistance, you are going to be able to say to yourself, wow, I'm going to be able to make a lot of cash because of predictability. Not only are you going to be able to trade with great entries, but now you're also going to be able to do what? Be able to know where your stop losses should be. Because when it comes down to understanding your stop loss, if you break your resistance line, right, that's where you get a big time breakout. So resistance is the level at which supply is strong enough to stop the stock from moving higher. So we can see in this image, when it moves on up, we get rejected. When we move on up, we get rejected. But guess what happens when we finally break this line? So I don't want to get too far ahead of us just yet, but how this would work is people would say, hey, Deck, I want to do a short contract, or I want to do shorting shares or a put contract right here. Beautiful. If we know that strong resistance, you have a stop loss right here. So for instance, this is $5. This is going to be your stop loss at $5.25. You give yourself a 25-cent stop loss. You make money. Because you know what? You don't hit 525. Do the same thing all over again. Hey, Deck, made money last time. Let's do it again. Get in at $5. Stop loss, where is it at? 525. You do another short. It's money making time. You make money on the downside. You make money on the downside. Absolutely beautiful. Now you say to yourself, hey, Deck, I want to do another short. I want to do another short right here. Guess what happens? It breaks on out. Goes on a nice move. Goes on a nice rip. You end up taking a very small loss. Look how much money you made on the downside. When you did a short here and a short here, you made all this profit. Look how much money you can lose if you just have a stop loss right above resistance. That's how much money you can lose. So if you need an actual understanding of this, I'm basically saying you can win $500 by shorting at resistance. You can win $1,000 by shorting at resistance. And you can lose about $200 by having a stop loss right above resistance. So you're losing 200, winning 500, losing 200, winning 1,000. This is how we get the odds in our favor. This is how we are going to have that good ratio. Because I know there's a lot of people listening right now, and let me ask you a question. Don't want to bring it on up, but how many people win $10, win $20, win $50, win, and then when you lose 200, you lose 500, you lose 1,000. Hey, Deck, I'm on a hot streak. I won $75, I won $60, I won $22. Oh, Deck, I just lost. How much did you lose? Only like $10 or so? No, I lost $500. Who here loses more money when they lose than when they win? Why do you do that, guys? You don't have to. Get in at resistance, set a stop loss. It's literally impossible. If I told you to set a stop loss above your resistance lines, it's impossible to lose more money than you win. So the thing is, all you guys have to do is set a stop loss. But I'll tell you right now, every single person that is saying at this moment, yeah, I lose more, I lose more money than when I win. It comes down to two things, and I already know what it is. Number one, you don't set a stop loss. You don't set a stop loss. Or you're setting stop losses that are so high up, you'll lose in your entire account. So 99.9% of you guys are not setting any sort of stop loss in any sort of way because you don't want to get taken out. You don't want to end up taking a loss. So you're just saying, okay, I'm just going to keep on holding. And the other of you guys are saying, well, Deck, my wins are very small because whenever I get into a play, I just want to take my profits right away. So you don't ever allow the play to actually work out. You don't ever allow the play to actually happen. The moment you're up $50, you take your profits because you're scared you're going to lose it and you're going to be scared you're going in the red. You allow fear to control your trading rather than actually have the play work on out. This play, if you short at the top resistance line, it's going to work out. It's going to work out. And when it doesn't work out, you're going to keep it very tight and very small. But this is the beauty of support and resistance. So we can see at this time, once a stock finds its top region, let's say $5, we can go ahead and we can find our bottom support. That could be $4.50 potentially. And now we can go ahead and start making money. A is our resistance. B is going to be support. And now we are up and down until one side breaks. You can have stop losses all up here. You could do dip buys and have stop losses all right here. And you could be looking constantly for entries at resistance to short or entries at bottom support for dip buys. When you do break out of this area, that's where you have the breakout. Or if you crack on down, that's where you'd have the short. But you just stay inside this channel until it breaks. Now, not only is resistance just perfectly horizontal or support perfectly horizontal, but we also have diagonal as well, which would be like an uptrend. Uptrends are great. Uptrends are great. Downtrends are great. You can still have your channel. You can still have support and resistance. You can still have the floor and the ceiling, the floor and the roof with having a diagonal uptrend as well. So we can want to also learn something very big. This is important that once you have resistance, this is $5 resistance. This is $4 support. We hit $5 and we fall. We hit $5, then we fall. We hit $5 and we go on a breakout. $5 now is now the new support line. So what you always need to understand is once you have resistance, if you break resistance, it now turns into new support. Just like we had resistance here, have resistance here, it now turns into support. If you crack back underneath it, well, then it turns back into resistance. So we need to know that support and resistance go hand in hand. Once resistance breaks, this line turns into support. Once support cracks, it turns back into resistance. So we can see that here on this example. We can see that when we come on down towards support, we bounce off of it. Come on down to support, we bounce off it. Come on down to support, we bounce off it. Here's support, we bounce off it. Now we cracked underneath. Now we're weak. As we come up, we get rejected off of it. And now it heads back on down. So support and resistance is basically telling us anything on this side is considered bullish. There's more buyers than sellers. Anything underneath the red line is considered bearish, where there is weakness here. We can also see it right here where we have our top resistance, and then it turns into new support. So that is absolutely awesome for us to be able to tell. Now, I do want to start talking about our possible entries on this play because I know the issue is with a lot of traders, we always get ourselves caught up with trusting our eyes and not trusting our game plan. Now, what do I mean by that? This is what happens with a lot of new traders. A lot of new traders see that a stock is maybe going on a spike. Let's say that this is $5 and let's say this is $4. What a lot of traders are going to realize and start doing is they start saying to themselves, hey, I want to get involved on this trade. This stock starts going from $4 to $4.25 to $4.50 to $4.75 and now $5. What's your mindset? Oh, wow, the stock is going on up. It's gone from $3 to $4 to now to $5. I'm missing out. That guy's buying. That guy bought in. I want to buy. I need to make this money. That guy's making so much money. Why am I not making money? And you let FOMO, the fear of missing out, get in on that play. So you know what happens with a lot of new traders? They always wait for a breakout before they jump in on a play. And since they wait for a breakout already happened. If we see that a monster spike happens, it already happened. If you want to make as much money in the stock market, you get in when it's at 0% and you hold it until it goes up to 100% and then you sell it. But a new trader doesn't know what stock to pick. So they don't ever pick the 0%. They wait until a stock runs up 100% and then they feel confident buying it because they know, oh, it's up 100%. I want to buy it because I think it'll go up another 100%, which is usually not the case, which is why everyone always buys at the top. You always see, again, people always buy at the top. You can't do that. So what you need to do instead is when you realize that a stock is going on a monster spike or a big time climb, you can't be a person that says, hey, I'm going to buy right here. Because then you buy right there and then you end up losing. And then you say to yourself, oh man, every time I buy, I end up losing. And then guess what? You get out of that play, you end up taking a loss. Here's your L, boink. And then it goes back on up. And you say, no! Every time I buy a play, I lose. But then every time I get out of the play, it goes right back on up. And now it's right back up to where I started at $5. And then you say to yourself, okay, I'm going to jump back in. Then you jump back on in. And then shortly after, guess what happens? Doink, goes on another big loss. This is getting ridiculous. This is insane. How is it every single time that I buy a stock, it literally just goes the opposite direction of me? Okay, I'm out. I'm done. You know what? I'm down $500 on this trade, but I'm done with it. I'm done with it. Okay? Now, guess what happens? Now it moves itself back on up. And you're saying, nope, I'm not buying. This is so frustrating. I'm over this. I'm done with it. I don't want to do it. I'm not getting in on this play. I know it's going to go down. Oh, hi, look it. I know it's going to go on down. Look at it. Nice. Okay, I'm a little happy with myself. Oh, here it comes. It's coming back on up. All right, I know it's going to go on down. Guys, get ready. It's going to go on down right here. And now it starts breaking on out. Now it starts going higher and higher and higher and higher. And now you're saying, what the heck? No, it's breaking on out now. See, the breakout's finally happening. Let me buy it. I'm buying right here. Nope. Boom. Why can't I win? Why can't I win? Every time I buy, it goes on down. Every time it goes on down, it goes on up. You know why? Because you are just going off emotions. The stock's going up, let me buy it. No. Stock's going up, let me buy it. No. Stock's going up. Like the thing is, traders, you know what's extremely easy? You can either be that guy, which some of you guys are at, right? Which I don't want. You can either be that guy right there, or you could be this guy. Let's be this guy instead. We can know that $5 is going to be a resistance line. It's a natural resistance line. I always tell traders that whenever you come up to $5, that you're always going to have resistance. So guess what happens? $5 hits. Here's our A point, right? Then we come back on down towards around $4. Here's our B point. Now we know we have a bounce at A. We have a bounce at B. Enjoy life, baby. You can go ahead and say to yourself, all right, I'm looking for a bounce play from B up towards A. Here it comes again, up towards A. Guys, get out of this play. We know we're going to have resistance. I'm actually going to load up on a short right here. Short coming back on down. Guys, we know when to get out. When do we get to come on out? When we come back down to $4, when we come back down to B. I'm going to look for a dip buy. Dip buy didn't go all the way back on up. We're still holding $4. I'm going for another dip buy. Hey, guys, there's another lots of money at this moment. I'm going to lock out my profits right here. Locking out. Hey, guys, we just got a breakout. We just broke out of resistance. Get ready for a little bit more buying. I'm buying in on this play. I'm going to lock in profits. I don't know how high it's going to go. Lock in profits here. You would have won here, you would have won here, you would have won here, and you would have won here. How awesome is that? And now you also know something else. You also can say to yourself, hey, where is the next dip buy going to be? Well, I know that $5 was extremely strong resistance right here, and $5 was strong resistance right here, and $5 was extremely strong resistance right here. Guys, I can tell you $5 is going to be strong support now, right? That's strong support. That's strong support. Here's more entries for you to win on. Here's more entries for you to win on right here. So you can stick with option one guy if you want to. That guy, have fun being that guy. Or you could be the guy that says this. Two different people. Two people see two different things. First guy sees that the stock's going on up. We got to buy it right away. Other person says, oh, let it hit resistance. Let it hit support. Let me build my foundation. And now I can just go back and forth and make money nonstop. It's an ATM machine, baby. That's all you guys got to do. So we can see how resistance turns into support, how support turns into resistance. Now let's start talking about some different types of support and resistance. Sound good? So different types of support and resistance that we have at this moment. We do have right here, natural, past chart history pattern, and detailed. So natural, past chart history pattern, and detailed. So this is what I mean when I say the word natural. Natural resistance is a psychological strong resistance lines based off whole numbers. So it depends on what price of the stock you are looking at. If we are looking at penny stocks, let's say stocks that are sub $20, the strongest resistance lines are going to be every $5. $1, $5, $10, $15, $20. These are super strong psychological numbers that are not easy to break above. When you go from 99 cents to $1 per share, you usually always see a pullback. If you can break $1, you usually see a spike. When a stock goes from $8 up to $9.95, you usually see a big time dump because $10 is a strong resistance line. When you break $10, you usually see a very big breakout. And it's just because we're going from pennies, 99 cents, to now $1 per share. We're going from single digits, $9.99, to now $10 per share. Just like, yes, you would be correct. When we go from $99 to $100 per share, it's very tough to be able to see the stock get above that area and usually turns into a reversal. Almost the same exact thing with bounce plays as well. When you come down to $100, you usually always see some sort of bounce play. When you come down towards 105, you see a bounce play. We already went into the examples on the S&P 500 earlier. 110, you usually always see some sort of bounce play. These are natural support lines that fall into the category of $1, $5, $10. When it's smaller plays, it might just be whole numbers, or if it's very small plays like sub $5 stocks, it would be every 25 cents with the dollar mark and the 50-cent marks being the strongest. But every time you come on up, $5, get ready for a pullback to begin with. $10, get ready for a pullback to begin with. $50, get ready for a pullback. $25, get ready for a pullback. $75, get ready for a pullback. $200, get ready for a pullback. $225, get ready for a pullback. We always see these pullbacks at these natural resistance lines, usually within $5 increments. The bigger the stock, the bigger the increments. So we would say small plays, 25 cents, 50 cents. Medium plays, $1, $5. Larger plays, $5, $10. Huge plays, $25, $50. And then massive plays, $100 would be the natural resistance and support lines. Now, it's not just based off of just natural. We are going to have our areas that people are always going to sell, but usually we can also see this match up with past chart history pattern. I'm going to go over past chart history pattern real first, and then we can talk about this. So we have past chart history pattern, which is going to be previous spiking highs, previous bounce plays. So what we can see in the past can also be able to tell us what's going to happen in this present moment. So let's look at, just today. I don't have any examples set right now. Let's just go through today and let's see, can we figure out why a stock maybe turned at certain areas from past chart history pattern or from natural resistance. So what we have to begin with is we already saw that we had a great bounce. Let's go back over towards a 3-minute time frame. We've already seen we've had a perfect bounce off the price of 410. Came right on down towards around 410, boink, bounce on up. Everyone go over to a 30-minute time frame and you can already see every time 410 blue line bounce, 410 blue line bounce, 410 blue line bounce, 410, 410, 410, 410. This is not only past chart history pattern, this is also natural resistance. Let me ask you guys a little bit of an important question right here. Does anyone know how high we spiked up to today? Does anyone find it odd that we spiked right on up towards the price of 414.90? Isn't that right next to 415? 415, $5 increment, natural resistance. Does that not make sense to you guys? So we have 415 natural resistance. We have 410 natural support and past chart history pattern right there. I think that's pretty cool. I think that's pretty interesting. HCDI is still trying to move itself on up. I'm actually going to bring up HCDI in a second. But HCDI, you guys want to see something very cool and interesting? Notice this stock went from $5. Guess where it spiked up to? $10. After it spiked up to $10, it came crashing on down. When we broke $10, we got a very big spike on up. Isn't it crazy right now? I just hope like your eyes are just like opening up right now and be like, is this serious right now? It's like, is this like it really just works like this? It really just works like this. But people don't know this stuff. People don't realize how awesome it is. People don't realize how simple and how easy some of these plays can really be. We don't have a lot of, a monster breakouts at this time, but it's great to always look at the top gainers of the day to be able to see where and why they're getting rejected at the areas that they are. So previous history, past chart history, and natural resistance, natural support are all going to be major factors. Now let's actually look at something else that's pretty interesting. Detailed support and resistance. So detailed support and resistance would be any sort of indicators. When I'm looking at indicators, maybe a 52-week high or low, those are, part of the past, but they're also, some big standout points that we always like to look at. And then I also look at the 50-day moving average, a 200-day moving average, a 13 EMA, VWAP, different indicators that I'm going to teach you guys about. But we always see some sort of selling or a possible breakout at breaks of indicators. So where were some strong indicators today that led to either reversals or led to breakouts? Well, let's go ahead and take a look right here. First things first is let's just take a look over on HCDI. Does anyone notice something about HCDI? Does anyone see that HCDI came on up to the price around 1350 and then came crashing on down? Can anyone see that it came up towards around 1350 and came crashing on down? Can anyone see that it's trying to break through around that $14 mark and came crashing on down? Can anyone see that it's trying to still try to spike on up? Can anyone figure out why? Well, it does have some natural resistance right on $14. But can you guys also realize that when it came up to the red line before, it came crashing on down, and it came up to the red line right now, and it's trying to break above it, but a lot of people are leading towards what? Crash on down, crash on down. So is it odd that when we spiked on up the first time, it came right on up towards that price area, then came crashing on down? So the thing is, basically out of HCDI so far, we had a spike up to $5, which we broke $5, led to a breakout. Hit $10 natural resistance, crashed on down. We broke $10 and we spiked on up towards the price of $13.50. $13.50, we crashed on down. $13.50, we crashed on down. We crashed on down because right at the price of $13.50 is also the 200-day moving average. So I'm telling you guys exactly where stocks are going to go up to, and then I'm telling you guys exactly where these stocks are going to fall back on down. And then if they break these areas, that's when we have breakouts. Let's see what happens on HCDI as we come on up towards $15 natural resistance. The high of the day is at $15 right now, and let's say we do a put contract over on HCDI at this moment. Let's see if it has trouble right around 15 bucks. So here's 14.90. Are we going to break it? Okay, we just broke it for a second. Let's see how much higher it's going to go. Let's see if it reverses at 15.50. Let's see if it reverses at 15.25, because we are still going on a nice little spike here. We got 15.22, 15.37. So the next resistance line would be 15.50. 15.50. Let's see if this is going to break through it. Oh, 15.37, 15.40, 15.40 so far we got up towards. Let's see if this is going to reverse at this natural resistance line of right near that 15.50 mark and start coming back on down. This big breakout, though, happened from where? This big breakout happened because the 200-day moving average. Look at that. That orange line lines up right with the 200-day moving average. 200-day moving average right here. Right here. Old resistance holds up as support. Stock's still looking for a possible new high up towards around that 15.50. Here we go. Let's keep on spiking. Now it's still going. Still breaking on out right now. Guys, why is it still breaking on out at this moment? Because we broke the 200-day moving average, because we broke through $15. How much more is left in the tank? Let's look at past chart history pattern. Past chart history pattern shows us that we technically have room to run up towards around $17. Deck, where are you getting $17 from? Well, I'm looking at resistance. Resistance is right here, $17. I'm getting that because that's where I see a bounce play here. I see a bounce play here. I see a bounce play, then a crack here. I think at this point, since we broke through a lot of resistance, we broke through 1550, we broke through some strong resistance lines, we have room to run up towards this old resistance line, which would turn into still current resistance. So if we ever get up towards around that $17 mark, that's where I would personally look for a short entry, because I know that that's going to be a great area of reversing because of that past chart history. Old support will turn into new resistance. Just like the example that I showed you guys. Everyone look at this picture right here, and then take a look at this picture right here that I have for everyone, where we have a support, 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 turns into resistance. That's where we'd reverse back on down. Support, 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 crack of support, goes on a nice spike, comes on up towards around $17. That's where we'd get a very nice crack back on down. So HCDI, I would definitely keep my eyes peeled on this play if I were you. See if that one's going to be able to turn somewhere right around that $17 mark. I think that could be able to make you guys some nice cash and be able to make you some nice money. But this is how, when I'm trading, how I'm always constantly thinking about these plays. I'm trying to figure out, how high are they going to go? Where are we going to reverse? What are we going to be seeing coming on up here next? So let's head on over. Let's get back over towards our lesson at this time. And we've gone over natural support and resistance. We've gone over past chart history support and resistance. We've gone over detailed support and resistance. Now, it really comes on down to the pure fact that you must master support and resistance. If you can master support and resistance in your stock trading, it's going to be simplified because all you guys have to do is understand that you can buy on dips and you can sell at resistance. And this is why, again, channel patterns are so awesome. Channel patterns and channel setups. When we have our channel patterns and our channel setups, we know exactly where to enter and exactly where to exit. So buy at support, sell at resistance. Short at resistance, cover at support. Buy at the breaks of resistance, short at the cracks of support. We can see all these different channel pattern setups at this time. So really the easiest and most basic way to ever just trade a channel setup when you guys see a channel setup is to just do this. When you look at chart history and you say to yourself, I saw the S&P 500 go up towards the price of 415 and it came on down towards the price of 410. So we have a little bit of a larger channel here. Strong resistance up towards around 415. Strong support back on down towards the price of 410. Now, obviously, it's not just 410 and 415. We have 411. We have 412. We have 413. We have 414, right? We have all of these price points as well that we need to understand. But you cannot, I will tell you a huge issue here. The biggest issue with traders is this could be what the S&P 500 looks like. This is just random stock movement. The biggest issue with traders is they don't allow patience to take effect. If I see that 410 is our support line and I see that 415 is our resistance line, basically take a screenshot and draw an imaginary box right around the very top of support and draw an imaginary box if you want to in red and blue. That's kind of what I always do, right around resistance. So support and resistance, and support's on the bottom, resistance is at the top. And what does this tell us now? This tells us that we must get in on good entries. If it has room to start reversing at 415, people start doing reversals at the price of 413, 414. Hey, Deck, I'm going to buy the stock at 412. Why? Oh, I think it's going to go on up. It's starting to move on up right here. Oh, Deck, I'm going to get in on the play. I think we're going to dump on off here. Avoid anywhere in the middle. The middle is the worst place to ever buy on a channel because in the middle is nonsense. Is the middle in gambling? In the middle is where all the randomness is going to happen. You do not want to be buying anywhere in the middle. What you want to do is be strict with yourself and say, when we hit at least, I would say 414.75, then I could start getting in. 414.80, 415, maybe even a little higher than 415, but stick to at least 25 cents and above when you have these big plays. Same exact thing with the bottom. Hey, Deck, 410 is support. I'm not looking to buy in at 412. I'm not looking to buy in at 411. I'm looking to buy in at 410.75, 410.40, 410 on the dot, 409.80. I want to be looking as low as possible. But most people end up making a huge mistake of buying randomly in the middle where guess what happens? It goes down and it goes up, then it goes down, then it goes up, then it goes down, and you're never actually making money. You're just kind of losing it and gaining some and losing it and gaining some. So channels are great if you actually have the patience to follow them. And as we talked about, we just have a stop loss right above this area and we have a stop loss right underneath this area. So now guess what happens? If you do end up jumping in at the very top right here and you do a nice little short, that could be, let's say $700. And you do another nice little short right here. And let's say you hold this all the way on down. That could be $1,400. And you could do a nice little dip buy right here and hold this all the way on up. That could be $1,000. And you do a nice little dip buy right here and you hold it on up. That's $1,000. And you know what? Maybe you do one and you end up taking a loss. Doink, doink, hits one right here. Doink, you hit a loss. Doink, hit a loss here. Doink, hit a loss. You lost $300. You lost $300 there. You lost $300 there. Guess what? You made 1,000 here, 700 here, 1,400 here, 1,000 here. Your 2-3 losses are made back by one win. But remember, most people don't wait for good entries and most people don't set stop losses. And that's why they don't end up winning. That's why they're not consistent with their trades. So channel patterns are absolutely crucial for us. A channel is going to be referred to as 2 price points of support and resistance. What do we look for in channel breakouts? So this is going to be moving into a little bit more of a breakout of a channel pattern. You already know how we like to trade channel patterns. There's going to be one thing that you always need to be on the watch out for. You hear myself talking about it. You hear a lot of top traders such as AK or Zach or J Trades or Taylor Trader or Active Trader or Alex or all Iggy. We hear, a lot of these guys all talk about one thing. And this one thing is looking for higher lows or lower highs. Okay, so higher lows and lower highs are going to be extremely important to understanding which way a stock is going to break out. When we say we have higher lows, this is what we mean. When a stock is still going up, even though it has its pullbacks. And does that make sense? It's still going up, even though it can fall at times. We might start at $1, but at the current price, we're up to $3. And how is that happening? Well, we definitely have our pullbacks, but every single pullback that we have is a little bit higher than the last pullback. So even though we have our pullbacks, the stock is still progressively moving itself up. The stock is still progressively climbing. Now we can also have lower highs where we have spike and drop, spike and drop, spike and drop. And even though we're moving up at points, we're still progressively moving down. Each one of these highs is a little bit lower than the last one. And what does that show us? That shows us that there's more weakness, there's more sellers, there's more shorters, there's more put contracts. So that shows us that we're going to be falling. So now take what you just learned right here and let's now put it over towards our patterns. So our patterns that we have for a third touch breakout is usually on the third touch of a channel, third or fourth touch is going to be when the breakout happens. So this is what we usually have on a third touch channel breakout pattern. We are going to have our channel set on up. We are going to establish resistance. This price point right here, we hit it. We have a big long upper shadow. We start falling back on down. That establishes resistance. Then we come back on up right here. That enforces resistance. And then now the third touch right here is the break of resistance. Now, what did I tell you about higher lows? What you want to be looking for constantly is where we come on down towards. If we keep on dropping and every time we drop, it's a little bit higher than the last point, that's moving itself on up, which is showing us that more buyers are going to be moving on in, which is going to lead towards a very nice spike and a very nice move. So always be watching for higher lows after having established resistance. So what we can see here is we establish resistance. We even have another little touch right here. We enforce resistance. And now we have our break of resistance. We can also see we have one touch and we start moving ourselves on up as our buyers start gaining more strength. Very important. We can also see we establish resistance, we enforce resistance, we break out of resistance. You can see we had low, low, higher low, breakout. So when we have these channel patterns, it's very important that you look for lower highs or higher lows. And when you have these lower highs and these higher lows, that is going to lead towards very nice climbs and very nice pops. We run on up, we establish resistance, we enforce resistance, then we get our breakout and our spike. This one's also interesting because it broke resistance and then held up as support. Remember, old resistance holds up as support, and then we got a very nice spike and a very nice move here. Now, I want to talk about basically what we talked about earlier when we said to every single person here, hey, who here loses more than they win? This is what it comes on down towards, as in having that trading plan and that 2-to-1 ratio. That 2-to-1 ratio is so important for us. And I really just want to give you a visual of what a 2-to-1 ratio really is. So I always like to make this example. This is the example you have probably seen before, where it just comes down that every single win that we have should be 2 times our loss. Okay? So every single win should be 2 times our loss. So in retrospect, if I win $20, my losses should only be $10. And this is how we're going to progressively be able to be successful in the stock market. So I have friends and I have traders that win 25% of the time, and they're successful traders. How do you lose 75% of the time and you're still a successful trader? Because you only allow your losses to be X amount your wins, a smaller amount than your wins. So let's go ahead and take a look right here. We are going to have this just simple X and Y axis graph right here. On this side, we are going to be having our profit. So profit is going to be on the upside here. And then we are going to have duration, or we could say time, on the bottom. So we are starting off with $0 in 2023, or not $0. Let's say we have a $5,000 account, but we are at $0 in profit. We haven't made any money just yet. Okay, we haven't made any money whatsoever. So guess what happens? 2023 is here. We end up taking a loss. Here's a loss. Next trade we have, here's a loss. Let's say the next win we have, we win one. Guess what? Boom, we're back to even. Now let's say we win another one. Boom. Now let's say we have a loss. Remember, your losses are smaller than your wins. Let's say we win one. Let's say we lose, 3 in a row. We lose one, we lose one, we lose one. Let's even say we lose another one. Let's say we win one. Let's say we lose one. Let's say we win 2 in a row. Let's say we lose 2 in a row. Let's say we win 3 in a row. Let's say we lose 5 in a row. Let's say we win 2 in a row. You can see what's going on here. What do we have at this moment? How many wins do we have? At this time, we have wins. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have 11 wins. How many losses do we have at this time? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Losses, 15. We have only won 11 times out of how many trades? 31, 36 trades, 26 trades, whatever it is, right? So guys, 26 trades here. The thing is, that's not good. That's not over 50%. But look what's going on with our trades. We have our diagram showing us that our chart, that's our P&L graph. We are in the profit. Remember, we started right here with 0. Look where we're at this point. We're all the way up here. We could be up again a few $1,000s. We could be up $3,000 from where we started. And that's with losing more than what we won. So how did we do that? We did that simply enough because all we did was have a stop loss. So traders, I can't stress it enough. If you lose more than you win, it's because you are A, too fearful to allow your trade to actually win you money. And number 2 is you're not setting a stop loss and you just have an ego and saying to yourself, oh, I don't ever want to take a loss. It'll come back down at some point. Set a stop loss above a good entry. Set a stop loss above resistance or set a stop loss underneath support. Worst case scenario, you lose whatever you set. Best case scenario, you make triple whatever you set. So the thing is, if you trust your game plan and have confidence, that 2-to-1 ratio is going to be absolutely spectacular. So let's actually talk about setting up a game plan though. When we set up a game plan, all right, in our trading plan, it's going to consist of where's our entry, where's our exit, where's our stop loss. Your trading plan is your formula for your upcoming trade. Trading plans help us cut losses quick and helps maximize profits. So why do we have trading plans? Well, preparation leads to success and eliminates fear. Let me ask you guys a question. How many people in high school, how many people in college ever had a big test that they never studied for? There's 2 ways that you can go into a big exam. You can either study all night, study the previous week, put together a study guide, do flashcards, and when you sit down at that desk, you feel incredible. You feel amazing because you are super confident. You look at the questions, you say, I know this one, I know that one, I know that one. Or you could be the guy that just says, oh, there's a test today? You were out all last night partying, playing video games with friends, just searching YouTube videos, just messing around, watching movies. How do you feel when you sit down at that desk and you don't know any questions whatsoever? You feel fear. There's 2 ways that you can feel every situation: fear, or you're going to have confidence. That's all it is. If we prepare with an entry, with an exit, with a stop loss, with a reason on why we're getting in on that play, we have complete confidence, which means we're all ready to rock and roll. And so many people think the trade is where you make money. You don't make money during the trade. You make money during the preparation. The preparation is the tough part. The preparation, guys, is where you guys actually look to figure out how is this trade going to react. So the thing is, I do my research, I get involved in my trade, and then I basically click my finger, boink, right off the mouse, and then you can honestly just sit back and let your thing go. Sit back and let it happen. You got your stop loss set. You're already in on this play. You got your target set. This should be the time that you're most relaxed during the actual trade. If you are saying to yourself, oh, I'm freaking out during the actual trade, that's where you had an issue. If you're freaking out during your actual trade, that's where you probably didn't have any sort of preparation. That's probably where you're saying, oh, wow, I don't know what's going on. I'm fearful because you're randomly gambling. You're gambling, not trading. I don't know if anyone's ever seen that movie, Free Solo. You guys ever seen that movie with Alex Honnold? He's that guy who climbed El Capitan without any sort of ropes. He's a free climber, solo climber, where he just climbs with no ropes whatsoever. And people ask him, they say, do you ever get scared when you're out there, climbing and you look down and you see how high you are and you have no ropes, and if you slip, you're most likely not going to live? And he goes, well, if I'm scared, that means I obviously shouldn't be up there doing this. Like, it's supposed to be easy. Like, it's supposed to be calm and collective. It's supposed to be, I've done this route so many times that I already know what's going to happen. I already know exactly where I need to put my hands in every single move. Same exact thing with stock trading. Stock trading, if I'm scared when I'm trading, it means I didn't prepare. It means I don't know what's going to happen next. You should have a situation and a plan for absolutely every single move. So if we want to just have a standard trading plan, we're following the ratio, following that 2-to-1 ratio. We're going to have a 25-cent target, a 12-cent stop loss, 2-to-1 ratio. This allows you to win once and to be able to make back those 2 losses. And as you guys know, we already went over this 2-to-1 ratio, making sure that you guys are all set, ready to go. When it comes down to entering plays, we know we enter plays at the break of resistance, bounce off support, and never in between the channels. Never in between the channels do we ever enter stocks. We exit stocks where at the next resistance line. If we see volume or the level 2 drying up, that means there's no more buyers. So we always like to get out there, and we want to make sure we're being as smart as possible. Ladies and gentlemen, understand how predictable stock trading can become through support and resistance, natural, past chart history, and detailed, following that 2-to-1 ratio game plan, making sure you understand entries and exits, understanding how support turns into resistance, and how also stock trading is really one big psychological game where we are just trying to understand where does everyone else see entries and exits, and that's where we're going to be able to make the most amount of money.